The third decade of the 21st century ushers in more than a new era, it marks the silent reconfiguration of civilization itself. The engines of growth have moved from maritime trade to molecular precision, where nanometers govern the architecture of influence. In this subtle revolution, the lines between economic and existential transformation begin to blur. Beneath the language of risk mitigation lies a more profound current. A quiet unraveling of interdependence, redrawing the geometry of global power. The U.S. sanctions on Huawei resemble more than policy, they echo the Maginot Line. A symbolic fortification in the digital age, built to contain, yet fated to be bypassed. In parallel, China's dual circulation is not merely strategy, it is a declaration of economic sovereignty. Economist Richard Baldwin once likened globalization to a three-layer cake. Goods, capital, and information. Today, those layers crumble under the weight of digital borders and techno-nationalism. From the Indo-Pacific framework to the divergence between SWIFT and CIPS. The battlegrounds of finance and code now shape the world's emerging architecture. This is no longer a contest of balance sheets or trade surpluses. It is a philosophical tension between restraint and resurgence. Between empires fading and others rising. A modern echo of the Thucydides trap, refracted through chips, algorithms, and cloud sovereignty. At its essence, decoupling exposes the paradox at the heart of globalization. What was designed to unify, now divides. As the US dollar grapples with the Triffin dilemma, and Silicon Valley's edge meets the resolve of Nanshan's silicon engineers, a new bifurcation emerges, one road leading toward shared evolution, the other toward hardened spheres. Do we race toward interstellar advancement? Or fragment into isolated digital spheres? In 1999, Xiao Liang and Wang Xiangsui coined the concept of unrestricted warfare. Its modern embodiment is not in bombs, but in bandwidth and rare earths. The U.S. CHIPS and Science Act has formalized a semiconductor alliance, while China's advances in quantum communication, seen in projects like the Michias satellite, suggest a pivot toward national innovation ecosystems grounded in sovereignty, not dependency. Victory, in this landscape, no longer hinges on military might, but on technological precision, systems resilience, and informational integrity. Security now includes blockchain stability and the fidelity of digital infrastructure. The Biden administration's small yard, high fence doctrine, exemplified by export controls on SMIC, illustrates how nanoscale technologies now delineate grand strategy. This is the Thucydides trap rewritten in code, not a battle of armies, but a contest over AI ethics, cloud architectures, and quantum supremacy. China's holdings of U.S. debt, and American tech giants' entanglements in the Chinese market, create a paradox of antagonistic interdependence. Too bound to break, too tense to trust. And yet, amid rivalry, cooperation persists. Climate diplomacy stands as a quiet counterpoint, a reminder that in this era of quantum entanglement, confrontation and collaboration can, and do, coexist. This is not the Cold War of old. It is a cold entanglement, fragmented by digital standards, conflicting governance models, and diverging currency regimes. The decline of dollar hegemony mirrors the stress fractures in global governance. The modern Triffin dilemma lays bare the contradiction between the U.S.'s domestic revival and its role as steward of a global reserve currency. Initiatives like the Inflation Reduction Act aim to reindustrialize America, but in doing so, may erode the very trust that sustains the dollar. The data speaks quietly but clearly. By 2022, the dollar's share of global forex reserves fell to 58%. its lowest since 1995. Meanwhile, China's digital yuan experiment now spans over 180 countries, signaling a quiet rewiring of the Bretton Woods legacy. Within the United States, the social contract is fraying. As economist Thomas Piketty notes, the top 1% has increased its share of wealth from 30% in 1989 to 38% in 2023. Incomes for the bottom half have stagnated. This imbalance has fueled populist discontent and birthed policies like America First. Attempts to reclaim a middle class hollowed out by a lopsided globalization. Quantitative easing may have saved markets, but it widened inequality. Big tech's rise has come at the cost of small businesses. In this environment, economic decoupling becomes a convenient scapegoat, masking the structural pains of neoliberalism. Meanwhile, on the other side of the Pacific, China is reawakening its industrial confidence. Shanghai Microelectronics' 28 nanometers lithography machine is more than a technical milestone. It's a symbol. A shift from market access in exchange for technology to indigenous innovation. Huawei's Harmony OS is a case in point. A system born of sanctions, now a beacon of resilience. As economist Maria Mercado suggests, adversity has become the midwife of innovation. Yet, progress has not come without cost. In 2022, China's chip imports fell 15%, prompting painful reinvestments in legacy technologies. And the potential delay of future upgrades. At the same time, the U.S. confronts its own paradox. With the $52 billion CHIPS Act, it hopes to rebuild domestic fabrication. Yet, TSMC's Arizona plant tells a cautionary tale. Quadruple the cost of Taiwan, years behind schedule. A reminder that deindustrialization is easy to start, hard to reverse. Technological nationalism breeds strange workarounds. NVIDIA's customized A800 chip for China is a masterclass in geostrategic compromise. Compliance wrapped in commerce. It reflects the anxiety of Silicon Valley, torn between regulation and revenue. Tesla's Shanghai Gigafactory may be the clearest symbol of this duality. For Musk, it's a profit engine. For China, it's a strategic node in its energy transformation. Semiconductors may be the battleground, but rare earths, software standards, and clean energy tech are the broader war. This interdependence is unstable, but it is real. As Nobel laureate Angus Deaton reminds us, systems don't collapse from shocks alone. They break when balances become unsustainable. Today, corporate titans like TSMC and CATL are repositioning. Opening factories in Hungary or hedging operations across hemispheres. Not to sever ties, but to survive in a bifurcated world. A world no longer defined by the binary of Cold War ideologies, but by overlapping spheres of digital sovereignty, monetary influence, and moral ambiguity. One world. Two systems.